Ladies and gentlemen of the crypto space, we're live on a Friday, March 15th at 11:50 a.m. Throughout 2022 and 2023, we talked much more about macroeconomics than we do nowadays because obviously the price action is uh, warranting the center of attention. It's the most exciting attribute of things that people look at. And that's obviously inversely proportional to the degree of experience. The less experience you have, the more you're looking at the price of things. The more experience you have, you realize that the price is a manifestation of a system, the overall macroeconomic system. Now, we're talking about this chart, this Bitcoin dollar denominated chart, as potentially telling us something about Bitcoin. The Bitcoin chart tells us nothing about Bitcoin, its trajectory, and how it fits into the system. This chart is a manifestation of how it fits into the overall economic system. The chart unto itself doesn't really tell us anything about that, how it fits into the system. It tells us, of course, it tells us things, but there's a reason why we talk about macroeconomics, and it's not this chart where we get the most information. This is the downstream effect of the shit that's going on. And the first thing that a lot of novice folks would inspect is, how's this not topping? Uh, it looks like it went up more than it ever did in history, and that is the case. And you can try and talk about the ETFs and how it's different in that regard, and surely it is different. The flows changed the amount of buys versus sells, and that drove the price up. There's a variety of reasons. You can look to shorter time frames and say, sure, it could fall a significant percent. It could fall all the way to 35,000 and you're still on trend. That would be a mean regression. And but I just everything that I've learned over the years tells me this type of inspection is unreasonable or not the most useful in many regards. Um, with regard to buying and selling, you do look at the price charts and you would say this is at a premium. It's not at a discount. At discount, you want to buy at below long-term moving average prices. That indicates it's mispriced and the mean regression is to the upside. So when you're below a time-weighted average price, you're at a discount. 18,000 doesn't mean you don't go further down, but at some point you're going to mean regress. And clearly that's exactly what all charts do. All charts dealing with assets that have systemic importance. Breakout, retest, clearly a higher high. The higher high was literally back here in October of last year. So this was a confirmation, a time to buy that has just critical confluence. And now you're already up here. You got a premium. It crashes to what have you, 40s, 30s. Structurally, the chart is lovely. I don't look to the Bitcoin chart to understand the directionality of Bitcoin. And that's the whole point of my content is to turn the entire management of capital, specifically with regard or processing, digesting the reality of crypto markets, to turn it on its head, to think about these things differently. And you can't really do the things that I talk about in equities markets anymore. And that's why I love to focus on the crypto markets because you can do this type of stuff with the amount of capital that I have access to. And even less, you could do this with smaller amounts of capital, but you can't do it in the equity markets. The equity markets are past the point of no return. It's a perverted economic system, and we're not going to get into too much politics at some time. At points, we digress and dabble because obviously economics is a manifestation of politics, and in that context, we have a huge history going back to where we are politically, and probably looking towards the Roman Empire and the end of the Roman Empire at this point. So we are in March of 2024. Now, you could have a pullback. What does that mean? Are you interested in buying Bitcoin? Are you looking for a pullback? What's that old adage? If it was at 42,000, I'd be a buyer. Nobody's a buyer. Nobody, because it's the wrong train of thought. Buy the dip, sell the rip, buy low, sell high. Yeah, clearly that's a way to make multiples and engage in financial markets with that kind of activity. The vast majority cannot engage with markets like that. And that's why I do not. And that's why I share these stories about alternative ways of thinking and how to look at these markets to understand these markets and ultimately how to engage with these markets in a very sustainable kind of way. Let's um let's talk holistically about 2024. And obviously we'll come back to crypto markets, we'll look at crypto charts and price action and stare in awe at the prices that are at a premium everywhere. There's no discounts anywhere in the markets. But let's start with a little bit. I have two pieces of content today, and I talk about money and how money is used to print currency. And the vast majority of currency is printed in good part by the general public using banking infrastructure. And the tool is called credit that takes money and turns it into currency. Dollars aren't money, dollars are currency. And in the financial system of planet Earth, for humans, money is bonds. It's just what's used. You don't deposit oil in a bank account. You deposit collateral in a bank account, and the best collateral or the used collateral is U.S. bonds, U.S. long dated, long duration Treasury bonds. Now, clearly, there's marginal activity, but the core of the financial system is just that. You could get granular and you could get critical and have conversation about shit that people do. But if you want to be a reductionist to simplify the capacity to understand the system, bonds are money, money prints currency, dollars are currency. So if you are thinking in terms of how much currency there is in the system, first you want to think in terms of how much money is available in the system capable of printing currency. Then you want to understand what are the conditions in which money can be opportunistically turned into currency. Clearly, if you're going to pay a premium to do that, you're going to be hesitant. If there's going to be a discount to turn money into currency, more people are going to do it. There's going to be less of a friction. In fact, there may even be an incentive. What are those types of conditions? The cutting of rates. Cutting of rates is a bit of a double-edged sword historically because rate cuts are usually in response to collapsing or catastrophic conditions in the real economy, which has produced time and time again historically a divergence between the financial economy and the real economy. Now, over the years and decades, for that matter, the wealthy own assets in the financial economy, which has you know overlap in the real economy, and that's where farmland and manufacturing comes in, and shit like that, and then that's expressed in the stock market. But the financial economy is a whole nother world. That's not Citibank and Chase and HSBC stock on the stock market. It's the actual bank. It's the people that own the banks. That's the financial economy. And that's what's so fascinating about crypto markets because these are not stocks. These are not companies that are listed publicly on a stock exchange. These are companies that are pure manifestation of financial economy businesses. And that's why it's so hard to understand what these businesses are doing, the scale and the scope the potential of these businesses. That's why they seem so foreign or alien They are not in the realm of what people historically invested in the stock market. These are banks. You're literally interacting with banks because banks, what are the two primary business functions of banks is credit and foreign exchange. But that's it. If it is a bank, if it walks like a bank and talks like a bank, it is a bank. It doesn't have to have bank in the name. It doesn't have to have stupid stock on the New York Stock Exchange for it to be a bank. It doesn't have to re- report and do all the things of a corporation for it to be a bank. It gets into complexity with regard to regulatory matters, but we've talked till we're blue in the face about regulatory arbitrage, geopolitical arbitrage, geographic arbitrage, arbitrage, interest rate arbitrage. We're dealing with a system of banks, variations of banks, and different slight variations of the products that these banks offer in a layer of the financial economy that is above and beyond the, what is typically inspected. We're not dealing with the real economy, we're dealing with the financial economy, and this is above the existing financial economy. Because if you're in Europe, you're dealing with European banks. If you want to move money from European banks to US banks, you're going through very geopolitically sensitive uh, pathways, pipelines for that capital to flow. But if you're dealing with these banks in the crypto markets, you're at a layer where the bank in Europe is the bank in the United States, is the bank in Australia, is the bank in China. There's no difference. The connectedness of this banking infrastructure to regional banking infrastructure is another story. But the bank in Europe is the bank in China, is the bank in Australia, is the bank in the US, no less. That's it. That's why it's so big. The scale and the scope is a whole nother level of of a whole nother level as compared to anything anyone has ever seen. And that's what's so fascinating. So what I have up on the screen is the future. The future is imperative to understand relative to now. Because now you're looking at price charts and daily price activity, and you're going to drive yourself freaking nuts. Um, I've historically offered the analogy of train tracks and a train. When you're trading, you are throwing quarters at train tracks, hoping for the train to squish the quarter. When you are investing, you have a lot of train tracks and you are placing quarters on train tracks, speculating on which set of train tracks the train is going to pass over. Now, here's the thing. If you are heading north, all the train tracks are heading north, and you're placing quarters on a bunch of train tracks, and at some point, a train is going to come by heading north. The train is going to hit some of the quarters, and that is the mentality or the perspective that I have on these crypto markets. The train is going to hit some of these quarters. And all I want to do is place quarters on particular tracks that I think are the most meaningful, the most significant from an infrastructure perspective. What kind of infrastructure? Banking infrastructure. All the shit I just talked about. The craziest business exposure I've ever seen. And the only other factor in the equation is time. And time is a complexity because you're a damn human and have a shitload of emotions that drive you nuts. If only we could turn off the emotions. But isn't that the exercise, the age old exercise of how to control your emotions and inspect using your cerebral cortex, absent the emotions, do the calculations, the statistical analysis, the probabilities, and execute without emotion? So the best you can do is compartmentalize the emotion and understand the emotion for what it is. And it's important because emotions make us human, but emotions get in the way of doing the best you can to achieve your goals, meet your expectations, so on and so forth. So the year is 2024, and the United States government has dug a big hole. And that big hole requires $10.8 trillion of refinancing. What does that big word refinancing mean? It means the amount of debt when you hear the 34 trillion or whatever the hell it's at. They owe people $10.8 trillion this year. Not in 2030, not in 2040, this year. Now I know, excuse me, very sick today. I know folks have a hard time looking beyond today. But this year is such a small time horizon in the grand scheme of things. Please stop being your own worst enemy. Looking at today is not going to serve you well. It's going to drive you nuts. Looking at the meme coins is fun and entertaining. It's going to drive you nuts. Yes, you could do wonderful things and make a lot of money, but if you zoom out to a 1, 2 year time horizon, the market will do all of that for you. And if you zoom out to a 6 year time horizon, so you'll have some crazy shit happen at the end of 2025, heading into 2026, and everything will nicely recover into 2027. And then in 2028, you are going to be having the same story, except the system is going to be so much bigger because the rich get richer, because the financial economy is saved and the real economy is attempted to be controlled. When they're talking about consumer price inflation, they're not talking about the financial economy. They're talking about the real economy. They raised interest rates to historic levels at the Fed funds rate level. Fed. Did that slow down the credit of the US? Did Treasury say, "Oh, these interest rates are too much. Maybe we shouldn't borrow as much this year"? No. Whole point of raising interest rates is to slow down financial activity and the seeking of credit, the borrowing of less money. The federal government didn't hesitate and stop for a second. There's no tightness with these interest rates. The federal government moved forward unimpeded. They didn't hesitate for a damn second. The financial economy is spiraling out of control, and it'll take down the real economy, and that's great and fine and dandy, and all the fun, the thought experiments around BRICS or future financial systems and all that shit. That shit again will also drive you nuts because the odds are that it's a time horizon that's beyond anything that's reasonable. In my opinion, a reasonable time horizon is the cyclicality that has emerged in these markets. You sure as hell better have the end of 2025 on your radar for processing how to navigate your own financial shit show, and then take advantage of things in 2027 to find bottoms, buy businesses at maximally discounted prices. And in 2028, we're going to have a lot of fun all over again. And at some point, you have a mess. And you have nation state failures and all that shit and geopolitical conflict, another word for war. And the whole conversation about how governments are going to redenominate currency and do whatever bullshit they need to do to keep social order, because that is the base goal or exercise for all government, to finance social order. We know the end state. This all leads to conflict and the decay of social order where the rich get richer. The financial economy is going to continue to diverge from the real economy because that's what the economics tells us. What economics? The shit that we're looking at on the screen right now. All right, we're going to break this down, something we do quite often, but at least we're looking at a screenshot from artificial intelligence and a piece of text that we could digest numerically and semantically. If $10.8 trillion need to be given to people around the world that hold U.S. bonds of varying duration. How does the U.S. government get it? The Treasury holds auctions, and they say, whoever around the world could lend us money, do you want to lend us money? How much? $10.8 trillion. So that means this year the U.S. Treasury will give $10.8 trillion to people around the world and in turn print $10.8 trillion worth of various duration bonds, a good part treasuries, long duration bonds. Now, those treasuries, as we started this stream, are money. That's the money. What does the system do with money? This is obviously the reductionist perspective. This is the peer through the bullshit. I don't have time for wasting with the story perspective. The money is used to print currency. I don't care the investor and I want my 5% and lock in your 5% and then your inflation protected your tips and shit. I don't have time for that shit. Treasuries are used to print dollars under good conditions. So $10.8 trillion isn't 10.8 trillion worth of the debt they need to issue this year. Doesn't get turned into $10.8 trillion of currency. The word is the Eurodollar market, so it's a historic terminology, and broadly it's used to describe that process of turning money into currency, dollars. They don't do it at 1:1, 1 to 1. Maybe they do it at 10 to 1 if they're scared. But historically, and what people do with regard to leverage that we see people do, they do it at greater than 10 to 1. So let's take the conservative 10 to 1, which sounds awfully tiny compared to how degenerate the system is. And if we see the degeneracy in these crypto markets for what they are, it's merely a tip of the spear of what the entire planet does with money and currency. So the conservative 10 to 1 says there's 10.8 times 10, which is $108 trillion, which is going to flood the global financial system. Let's throw in deficit spending for 2024. At the run rate, that puts us at $13.9 trillion worth of stuff that needs to be printed by the United States Treasury. So at a 10 to 1, that is $139 trillion that is going to flood the global financial system at some point when the conditions are right. Maybe they cut interest rates 0.25%, cut interest rates 0.5%. Maybe, maybe there's some sort of recession and tax receipts start dipping, so they drop rates even further, which they really don't want to do. They don't want to do it because that is going to produce complexities from a real economy perspective, considering the availability of goods and services, which manifest in consumer price inflation. So they're doing what they're doing optically and politically to manage the consumer price inflation. So they will be pushing for higher interest rates. So the expectation for lowering interest rates is not there compared to cycles past. So I expect the opportune conditions for turning $13.9 trillion worth of treasuries into 139 conservative US dollars to be on relatively marginal interest rate cuts, 0.25%, 0.5%. I mean, we've gone back and forth between 1, 2, 3 to 8 cuts this year. A cut is a cut, and the floodgates happen when the cuts start. Now, bear in mind, the real economy could be suffering. The stock market could be rolling over, but we're not looking at the United States. We're not invested in the United States. You could always say that the whole thing is systemic. So the United States affects every other country. Great, I understand that, but that's not the destination. That's the path. The path will drive you nuts. It's the destination that matters, and the destination is between 24 and 25. Under the right conditions, the global financial system is going to be flooded with the largest amount of dollar currency units ever. It's going to make 2020 seem like a warm up. And this is coming. It's here. It's baked into the cake. It's the construct. $10.8 trillion worth of debt is saying, hey, Treasury, you got to fucking pay us. And they're going to pay one way or another. And how they're going to do it, and the effects of what they're going to do to pay that debt, is going to cause all of these things to play out at some point at the destination. 13.9 trillion leverage at 10 to 1 is $139 trillion, and you're all thinking tops and bottoms and thinking intraday. The whole space is going to run multiples. The whole thing, the whole construct. So that plays into an entire conversation to be had about portfolio structure, position sizing, portfolio size, how much money is coming in. And that gets complicated because that's a subjective conversation. That's a one-on-one conversation. Everyone's own personal situation. Listen, you're coming into the space whatever age, and you put in $100,000 is a different equation than you're 20 years old and you're buying $100 worth of Bitcoin. The entire equation's different. It's a very subjective conversation, and that's why it's a very hard conversation to have. And that's why I try and avoid that conversation and talk structurally. But obviously, you guys, I do encourage you to ask your questions in on the YouTube chat. Not going to be able to do it from an X perspective. So if you want to ask your questions, please jump over to YouTube and ask your questions. I'm pretty much happy to answer any questions, even if they're subjective. I'll talk about anything at this point. I'm fully comfortable and capable of helping you deal with all your emotions and financial complexities trying to navigate these crypto markets. Now, you might not like my answers, but they're going to be real and they're going to be clear and they're going to be honest. Now, there's another set of money that's a bit of a turbocharger. That's the money market funds, which is very United States centric. But as you can see, there's $6.3 trillion worth of pure cash, firepower, dry powder sitting around doing jack shit in a money market fund because they're staking it with the United States government. And there's no time lock. It's not like these boys are locked for 4 years or 4 months. It's usually an Aave deposit that's paying them, money market rates. This is literally a United States government staking position. Oh, who would have thunk that the U.S. government was into staking tokens, U.S. dollar tokens? But that is exactly what this chart is. $6.357 trillion worth of staked token dollars. Digest that, process that. So, under what conditions does this drain? It drains when there's crisis. Notice it drains when there's recession. This is buy the dip, Q3 2010. You know what kind of assets were bought between Q4 2008 and Q3 2010? Why? People were buying the dip, buying the discount, buying the discounted businesses. A fair amount of it chased depreciation and capital gains, but I'm inclined to think if you got an extra $1 billion sitting in a freaking money market account, you're going to probably want to buy a couple of businesses that produce cash flow. So that's the core of how the wealthy think. The core don't think in terms of, oh, I'm going to flip. I guess you have your traders and you have your wealthy traders that deal in fiat terms. But Saylor was talking very nicely on media the other day that the real wealthy don't give a shit about dollars. The real wealthy own property. And sure, the whole Bitcoin conversation comes into the equation, but property really is business and land and farmland, and but that's productive. The farmland's productive. The real estate's productive. So it turns out that banking is a pretty good productive business. Maybe it's the most systemically significant productive business in the financial economy. So that's pretty interesting going forward. In my mind, I see a great potential for a lot of this banking infrastructure to monetize beyond people's expectations. Because if I'm seeing these types of realities with regard to what these businesses actually are and how they fit into the economic system, particularly the financial economy, other people do too. And they're going to want to own them. And how do you own them? Because you can't set up a deal with a board of directors. You can't set up a deal with uh, with the CEO or whoever. Well, you can set up a deal with large holders. So in this regard, you could go to literally Etherscan and look at the holders list and see who is potentially susceptible, but you don't know who they are. There's a lot of pseudo anonymity associated with Ethereum accounts. So that brings up interesting potentialities with regard to how does a wealthy person buy one of these businesses? How do they exert control? How do they attempt to acquire the shit that they want to acquire? Because that's the way a wealthy person thinks. To understand how to get wealthy, you have to understand the wealthy people. And the wealthy people is they're not going to buy something unless they can have control over it or attempt to have a significant control over it, significant ownership of it. And it turns out, there's also the free market, the open market, so they can attempt to buy the things that people are freely giving away. So the liquidity depth, and they buy these tokens that are available for purchase. And what would that do? That runs the price. That's going to get multiples on shit that people are like, oh, this isn't going anywhere because they're looking at the wrong thing. They're looking at past performance. Past performance doesn't mean shit. What matters is the structure of the system and why wealthy people are going to want to own these things. And in that regard, the banks, they're going to want to own these goddamn banks at some point. The credit products, the foreign exchange products that are equal to and beyond the scale and scope of what traditional banks are capable of. You know how many people work for Chase and DevOps and managing server infrastructure and customer service and tech support? And all of this is automatic. There's no person, there's no people running these contracts. It changes the whole damn equation. So at some point, my expectation is these things want to get bought, and the interpretation of that is price go up, number go up. And that means past performance is certainly not going to be part of the future trajectory of many asset prices. The repricing, the great repricing. And that's why I don't have much interest in the meme shits. Gives a fuck. That's some social construct of player versus player, and manifestation of uh, of gambling of sorts. Not it has characteristics of maybe like the poker game where there's a pot. Certainly, the lotto analogy, the lotto inspection is applicable to things like meme coins. It's first out. First out the door is not panicking. Good old margin call reference. And that's all it is. It's a psychological game of chicken, and that's cool. And there's a lot of people that make a lot of money, but that's not what this is. This is the biggest investment opportunity that anyone has ever seen. And probably one of the best people that talks from that perspective is really Raul. And Raul doesn't really get into a lot of the things that I talk about with regard to how these systems fit into the global construct of the financial economy, not the real economy. So whoever wanted to own a bank, you got to own the bank before the big boys figure out it's a bank. Because by the time the big boys figure out it's a bank and they buy it, you're no longer going to be able to own it at a price that is consistent with a discount. You're no longer going to be able to own it at an appropriate price where your position size is decent and your opportunity is gone. So roll your perspective and your expectations and the way you interpret the space forward a couple of years. In your 20s, that should be easy. Even if you're in your 30s, and really if you're in your 40s, do it. Roll the clock forward 4, 8 years. And the potential for the entire space to reprice is going to be weird. It's going to be weird how much it reprices. That's how much the global currency construct needs to expand for governments around the world to finance, or at least attempt to finance, social civility and keep societies from decaying into outright chaos. All right, it's not bad. So that was two pieces of content I showed you, a screenshot from Claude and some Fred economic data. And that brings us to commentary. Tapsy's in the house, a pleasure. Yams in the house. Good morning. Good morning. Catching this one live. Got to go though. We'll watch later in a recording. That's the beauty of this content. It's on YouTube and now it's on X, which is potentially going to be more significant for a variety of reasons with regard to video content. Very interesting. 23 years old, 200,000 Y curve, 60E. Good numbers, very healthy numbers. Software dev for the last 5 years. Shit. God bless you at 23. Very nice. Taxes. So taxes are, you don't want to pay them. So don't sell things and focus on income. So Y curve is auto compounding, sure. And ETH is ETH. Uh, uh, you can get into tax complexity, try to rotate from underperformance to outperformance. And my opinion is avoid taxes at all costs. Everyone talks about them the way they should be talked about. You put in the work and they take your money and socialize it. And I don't want to participate in that. So I would encourage folks to not sell their assets, specifically to avoid taxes. I know a lot of people, the wealthy people on social media say, all right, don't be afraid to pay your taxes and make as much money as possible. And I'm sorry, but I don't subscribe to that. Uh, Try and see your portfolio not realize is the wrong word because that implies realizing some gains or something like that, but try and see your portfolio achieve what you wanted to achieve without realizing gains from a capital gains perspective to avoid paying taxes, because the construct that they built politically and economically is fucked up, taking your damn money like that, paying for bullshit. If when you were talking about smart contracts that are ultra efficient, that cut out the middleman, that allow for granular quantitative audits of where everything is. Can't even audit the Pentagon. What a fucking bullshit construct they have here. It's perverted and disgusting. So avoid things that. Look at you have great bags, dude. Come on, I my it's not, it's concentrated. So you might want to place some quarters on additional railroad tracks to such that you increase the odds of a train hitting your quarters. But frankly, at 23, just sit on that shit. That looks great, and avoid as best possible realizing any tax obligations. Building your own company. So your own company is a couple of different things from a 23-year-old perspective. You could create businesses. You could create a digital business, create a token and have some sort of economic model around it, some sort of credit facility or derivative product. That sounds great. You're software dev. You literally me, except you're earlier than me. I started when I was like 28, so good for you in that regard. Software is going to change. It gets complicated talking about like education and the way industry and business is going to change. AI, I don't see myself having much of a software development career in 5 years. I think I think that should be more important to yourself at the younger age. Um, don't expect software development to be the same in 5 years, and to the point where it's probably not people coding. It's probably more of a way to talk with artificial intelligence on how things are desired to be coded. I mean, you could easily have the product team and your software engineers are literally software themselves. So it's going to be really weird. And I think a lot about this from my kids' perspective, but that's a whole decade plus out. I think things are going to change really significantly in a 5 year time horizon and a 10-year time horizon. It's hard to really see the horizon at this point of what the hell it's going to be. It's going to be a completely different world. Stay healthy, of course. I won't digress too much into health, of which I could talk a fair amount about. Securing my family's financial future. There you go. I think I gave some good opinion in that regard. And with that kind of stack right there, I don't think you have to do much. Just put some additional quarters, as I said. Hi, Noah. Diego's in the house. How do you manage your VE RAM? Do you vote every single week? Sure. I'm still digesting it, how to optimally vote. I think it's just the beginning. Um, you know, here, let's digest where we are. So Denkun just launched and gas fees collapsed across the board. So Solana is probably going to continue to be significant. That 10.14% change in the amount of dollars available is extraordinary. It's obviously a combination of exogenous inflows and endogenous currency creation processes. That is a massive, massive number. And it's going to create extraordinary distortions in the pricing of assets on the network, which is why exactly almost all insanely outperforming meme coins are on Solana. So the question becomes how to have exposure and be tax considerate and build a business or add to your portfolio of businesses. And Solana, my interpretation is it's just a meme coin frenzy, and that's fine and dandy. I, from a business perspective, what like a Jupiter or this, like a credit market, some shit that does what Aave does on Solana solid. I'm not too interested in that stuff in comparison because it doesn't give me the exposure I want to the entire ecosystem. So probably the greatest potential exposure to the entire Solana ecosystem is Express vis-a-vis Hero Network. There's nothing that compares to what it offers from a potential return with regard to exposure that can be had. It's a B2B business. It's not B2C. They're not building user interfaces. They're not a one-off Jupyter, Solana, and so on and so forth. They're building a product for those types of products to plug into to coordinate with regard to incentive financing, liquidity depth financing, so on and so forth. So it's a B2B product. I favor B2B products because it's not a consumer facing product, but other businesses and what do other businesses like to do? Other businesses like to survive, continue to exist. So they're going to do whatever they can to continue to exist, which supports the B2B product. The more companies and businesses that plug into the B2B product, the stronger the B2B product is. And the more it's going to be price adjusted to no longer be mispriced. So literally a B2B product has other companies that are fighting to cause its appreciation. Nothing compares to Hero. Small position and give it 5, 10 years. 2 cents. That's my 2 cents, and that's my time horizon. And a lot of folks would say that's a crazy time horizon, but whatever, that's my time horizon. Uh, that was a digression from Diego's question. He's talking about Ramses on Arbitrum. Not finding it quick and easy to optimally vote It's not necessarily as productive as the vote numbers express or the percentage signs express. Maybe that is at least at my size of a VE RAM position, which is relatively large. It literally doubled in price, so it's relatively large. I think it's still up like 40, 50, 60% from my entry. So I still have some adjustments to do in that regard. But forward looking, um, I expect Arbitrum to significantly continue to outperform from an Ethereum network of networks standpoint. Uh, Transaction fees have completely collapsed. They're basically zero on Optimism and Base, and they're pennies or fractions of a pennies on Arbitrum. So we'll see what happens with regard to Optimum and Base. So that divergence or discrepancy in transaction fees could manifest in interesting ways. But generally speaking, I don't think that trumps my inspection of the quantity of stablecoins. There's a reason why there's $2.5 billion worth of stablecoins on Arbitrum and only $690 million on Optimism and 327 on Base. These are microscopic ecosystems, albeit I don't know how sustainable that is week over week. That's quite meaningful. Um, but in any regard, Arbitrum is still significantly in the lead. So that means something to me. Now that might change. Whether that changes or not right now is another story, but when it changes, you have to process it and accept it. Um, in that regard, you want exposure to optimism base, or you may want, it's all about exposure. So in this regard, the Ramsey's position offers exposure there. And my 2 cents with regard to biggest potential bang for the buck for exposure to optimism is neither optimism nor base, but rather Fractal. Fractal is an optimism derivative. It's a super chain participant, so that could be quite interesting. And we have yet to see what's going to play out. That takes time, but the point system is quite interesting, and that's not something I discount. And it's okay to miss things. It's not okay. It's okay to have not optimal or as best as you want exposure to a particular system. And all a portfolio in the end could do is the best it possibly can do. And that is in terms of exposure. So I have limited exposure to the Optimism superchain network vis-a-vis Fractal. Well, actually, really, it's not very limited. It's large exposure because Frax is the core position. So that's interesting. Maybe I do have large exposure to that ecosystem. Um, and the exposure to Arbitrum is Ramsey. So that is my 2 cents. It's not as productive as I would like, and in this regard, Ethereum mainnet is much more reliable and dependable, which makes sense. It's a much more established network with an order of magnitude more liquidity, more dollars, $76.8 billion in a positive sum environment, 3.31% on Ethereum mainnet. This is going to cause some wild economic distortions. Positive sum environment, well, the sum of the environment creates the distortion. Negative sum environment causes significant appreciation, and the contrary as well. Bitcoin started increasing in price before a move started going down. You say it's a reversal to the mean. Is there an indicator that we could tell us what that mean reversal will happen? Uh, so let's take a peek. You could get granular with the inspections, but let's see if we could. It's usually a forward-looking indicator, and the forward nature of move has to do with bond volatility, and that is one of the conditions that is required for money to be turned into currency. And it's very logical. If the price point of money is changing and the interest, therefore the interest rates on the money is changing, you may lock in a higher rate or have exposure to a lower rate. So that creates hesitation. But when the volatility is low, I've always said that creates complacency. If you got some shit sitting on your books and it's doing nothing, you want to deploy it. So that's exactly the causality in turning money into dollars is complacency and the lack of volatility. So usually as a forward-looking, so it's very hard because of this massive wick. But here, take a peek. March of 2023, and really Bitcoin bottomed in 22. But here, this is on the monthly chart. So very forward-looking indicator, in my opinion, the move. So October of 22, it really rolled over, and then you had to double dip with regard to volatility. So October of 22, oh shit, how about that? October of 22 still had another 2 months of depreciation on Bitcoin, but it basically bottomed. So in this regard, move is literally a 2 month forward looking indicator on Bitcoin bottoming. I mean, it's just right there. The move is a fascinating indicator, but you really have to digest and understand what volatility is, especially volatility in the price of money, um, and how that money is used to create currency and what that currency does. It buys things. So look, it's right here. Top in October of 2022, and Bitcoin, and here's October of 2022, 2 month forward looking indicator on Bitcoin literally bottoming. And notice the time frame on the charts. So that obviously pierced through a lot of bullshit. You can see a lot of granularity, but when you're looking at 1 month candles, you're not dealing with all that granularity, and it simplifies the entire inspection. Hope that helps. Also, is there a scenario where global liquidity is decreasing and crypto keeps going up? It's impossible for global liquidity to decrease without the system to experience social chaos. Liquidity decreasing means the real economy is bankrupting, and that means businesses are going bye bye. And everything is built on everything. If you look in the United States, it's like 7 companies that own the entire country. I forget the gentleman's name on X who did is actually on whatever another platform, and he put it over to X, and it was a great this breakdown of who owns everything. It's like 7 companies that own the entire stock market. So um, at some point, it's all connected. And the bankruptcies cause more bankruptcies, cause more bankruptcies, and everything spirals out of control. The whole system is a construct that's inflated. And the base state is literally M0, USM0. We're talking in terms of hundreds of trillions of dollars in the global financial system, but USM0, there is literally a grand total of $5.8 trillion in existence. That's it. There's hundreds and hundreds and hundreds and hundreds of trillions of dollars in the system. But that's the inflated dollars where money is used to create dollars. These are the units of account, the base units of account, $5.844 trillion. So, no, yes, no, and yes. And the point being, yeah, I don't think that scenario is something to consider. The global currency regime needs to continue to expand. Otherwise, you might as well stock up on MREs and hope you have an off grid solar installation to have power, because everything fails. Everything falls apart. It's complete chaos. Shotgun shells. That's the type of scenario. That's how you hedge that. Sir Joe present. Dark in August. Good morning. In Coomer, how are you? Cap Athletic Concept. Pretty good today. Very nice. Sick, but nice. Leandro present. Explain how Curve will be printing into the future. Will it still produce double-digit APYs? Um, Before I answer that, throw some comments. We're getting light on comments, and if you guys have anything you want to say, pop it into the commentary. Otherwise, we might keep it a decent length stream today. All right, so Curve, amongst other protocols, are foreign exchange venues, and most recently, a credit venue. Now, all of these will be competitive businesses. They will have cyclicality. They will have interest rates and conditions which favor using one versus the other. There will be competition that exists now and more competition that exists into the future. History shows us that businesses that are in the lead remain in the lead, and that's great. That's cool. And there'll be plenty of competition, and that's great, and that's cool. I've seen lots of comparisons recently about Curve versus Velodrome and an Aerodrome on base, which has run multiples. in a relatively low liquidity environment compared to Ethereum mainnet. Great, that's cool. That's all interesting, and then you can always consider exposure to these things. And the question becomes, can you buy it at a good price point, at a premium or a discount? Can the position size be optimal, an appropriate position size where XYZ investment criteria is met? If you can't, it might be a position which you need to not engage with. And that's a whole conversation about portfolio construction, which we've had many a times. So in the end, folks could be critical in that of many things, but Curve is the leader with regard to total liquidity depth from a foreign exchange venue perspective, and is a very much up and coming creditor. And the creditor business is outperforming from a revenue standpoint the foreign exchange business. So how does this go into the future? Um, we can think granularly and competitively, and you're going to drive yourself nuts. The biggest and most high level inspection is total currency units available. So you go over to here, and we are not even, well, we're close, but we're not even really close to where the end game destination is $146 billion in these crypto markets. And the all time high was about $40 billion more, 186 billion. Where are we heading? We're heading to hundreds of billions of dollars, 6, 7, 8, 9 trillion dollars. What happens? What does all that currency do? That currency isn't a symmetrical response in financial market activity. It's an asymmetric response in financial market activity. The more currency, the more financial activity. Financial activity is exchange, foreign exchange, and credit. So my expectation is, for me, multiples on principal and continued interest rates that are greater than the risk-free rate of return. So if you go 10x on the portfolio, athletic concept, and you're still producing 20% return, maybe it goes down to 15. That's 3 times the risk-free rate of return, and your portfolio just went 10x. So those are interesting scenarios that I often think about. And 10x on the portfolio heading into 2030 seems really prudent. That'd be weird considering the potential degree of expansion this space can experience with regard to total circulating currency units. I think 10x on almost anything systemic and established sounds weird heading into 2030. And sure, we're not talking about the macroeconomic assets, assets with the higher degree of moneyness, the gas tokens, Bitcoin, Ethereum, Solana, so on and so forth. So those multiples have a different type of inspection to be had because that's more macroeconomic inspection. Whereas you're talking about these crypto businesses, you're really dependent on the amount of currency units that they're exposed to. So that's this chart. Crypto as a whole, from a market cap perspective, is a couple of $1 trillion. And market cap is a whole other conversation. But really, the most quantitative inspection possible is the total amount of dollars available. And in that regard, is $146.5 billion that are chasing outperformance, chasing credit products and foreign exchange products. It's as simple as that. So it should be very interesting, in my opinion. And little to no work is needed, just time. And time is hard to pass. Good morning, Cap. Checking in, the bad guy in the house. Raul, pleasure. Looks like DeFi is a recreation of the fiat system. No, fiat is a nation state construct where the moneyness of the currency is secured by the trust in the nation state. It's a very different system. And sure, there's recreations. I would say this is an iteration and it of financial system improvements on the financial system that offers some of the biggest things I've ever seen. That changes financials forever, and that's particularly determinism and immutability. of smart contracts. It creates a predictable environment, which is something that is completely absent from traditional financials. It's overwhelmingly subjective across the board, from corporate boards and subjective dividends and stock issuance, or federal funds and central bank interest rate policy. It's all subjective opinion, and they're making those opinions based on data. But that's different than a piece of software making a very predictable decision based on data. So this changes the most important fundamental components of the financial system. Now, the thing that I think fixes everything is, sure, you got to fix the money. And how do you fix money? You introduce determinism and predictability. So the argument that Bitcoin fixes money is a great argument. But you can't only fix money to fix a financial system. That's only a part of it. There's no growth in a financial system with sound money. You need credit. You need to fix credit also. And the credit is the most perverted thing in our financial system, traditional financial system. And that's why money is so broken, because credit got out of hand. Now, what changes and fixes credit? I would argue the determinism and immutability. Immutable policy that's deterministically dynamic. This is the way it's going to behave under these particular circumstances. And now the whole system responds accordingly in a very predictable fashion. Everything becomes orderly and understood and smooth and seamless. That's what changes everything, in my opinion. Fix the money and the credit, fix the global economy. Not just money. Fix money doesn't fix the system. Cap, any opinion on the leverage trading and take advantage of the volatility in the crypto markets these days? No interest. I don't have time for that shit. Uh, the biggest brains in the room talk about playing around with meme coins and leverage, and they say 1% of the portfolio, and that's always fine. I just don't give a shit. I don't care about the marginal outperformance. Knowing what I know of how the global financial system works and what's coming, where the system is heading, the degree of currency expansion that needs to occur in the system, I don't have to chase it. It's going to do the work for me. Now, bear in mind, uh, this is a whole personal uh, thing that everyone has to realize, and it's because there needs to be a perspective of expectations. If your expectation is to turn $100 into a capacity to retire, one, that's a fucking crazy expectation. That's some youthful, exuberant expectations, dude. Did you put in the work? Have you been working for 10 years, 15 years, 20 years? Do you know what you're going to be getting? When you put in the work for 10, 15, 20 years in industry, like, I'm fucking tired. This shit sucks. If you're just getting out of college and you're still saying this shit sucks and you haven't been in industry, you don't really know how bad it is and how shitty it is and how much it sucks. So set those expectations as reasonable. And I still have a very high opinion of the real world and a great education and attempting to be productive. That's the thing. I did that for a long time, and I attempted to get as high as I could with regard to career in software engineering. And I understand quantitatively it is mathematically impossible to get to where I want to be, and where I want to be is just sit back, relax, and pay for things. I just can't do it at the top of the pay scale of a software engineer. It's just not mathematically possible. There's no way to retire. You can pay for things, but you're never going to be able to save enough money, and that's why savings, the fiat system, as you said, Dark and Argus, is very broken because of what it does to the dynamics of consumer price inflation. It's impossible to accumulate enough currency units to relax and just let time go by. You need to own business, and yeah, that's another consideration for the youthful. But then again, what businesses are the best businesses to own? A deterministic and immutable business. This is the best investments I've ever seen in my entire life. No matter, well, For the truly immutable crypto protocols, the crypto businesses, they will exist into the future. So all they need to do is prove lendiness, that they work, that they're useful, and it's a good, meaningful, systemic product. And they'll be here in 2034, 2050. As long as the crypto space continues to exist, a functional product will continue to exist. That changes everything with regard to business ownership because, yeah, you could start a business in the real world, a donut shop, a cafe, whatever. But that's not a financial business. And those are the most interesting businesses. Can you start a bank? Well, like when you're young and what do I want to be when I grow up? I want to start a bank, Daddy. I want to open a bank and I want to make it a new bank that's unlike any other bank that's ever been a bank. Well, that's what they're doing right now. That's what's occurring right now. So those are the kinds of businesses that interest me the most. And it's not as perverted as the traditional system, the legacy financial system makes it out to be, where things are heading. Banking has horrible overtones of the fucking banks. But when you put determinism and immutability into the equation, there's no one to point fingers at. The system is doing one thing and one thing only, providing a service, a product, and protecting itself. But it's not protecting itself based on opinion, a board's opinion, human opinion. It's protecting itself because that's what it was designed to do. So there's no one to point fingers at but the people using the product and the service. So when you have a deterministic and immutable credit business, all the risk is placed on the debtor, not the creditor. And that's what they always say is the problem with banking. You borrow $1,000, it's your problem. If you borrow $10 million, it's the bank's problem. Not in the crypto space, not the way these systems are being built. It changes the equation. So these are the best businesses that I've ever seen. So if you're young and hungry and you're a software engineer, build a business, but it probably best be in the financial economy, and it should be deterministic and immutable. And, and that's pretty interesting. More advice to European small portfolios, five figgies, time horizon, portfolio size. You have more opportunity when you're younger because let this whole thing, this whole crypto cyclicality play out for 3 cycles. It takes about 3 cycles to really understand what you're doing. Sure, you can make multiples in the crypto markets, but when you're young in your 20s, it's probably best to just to do industry. Hopefully, you went to college and you have some sort of education. You didn't have to go to college to have an education. You could basically get your damn education on YouTube at this point. And now that's changing where other social media platforms are giving you this incredible educational content. So, one, if you're hungry enough, you don't need to pay for education, period, period, period. That's very meaningful. So, don't neglect industry, work, and that's fine. But don't fuck up like so many people. Don't move out if you don't have to. You stay with your family and have 5 roommates and take that crazy monthly rent that everyone's complaining about and split it up 5 ways. I know it sucks, but that's not the destination. It's the path to the destination. You do what you have to do to get to where you want to go. So you make your sacrifices. I see so many YouTube or social media videos of young adults right out of college complaining that their rent is expensive and how could they afford these things? Yeah, because you have a 2 bedroom apartment and you're living alone. What do you need a 1 bedroom apartment for? If you're living by yourself, you have a studio apartment. Yeah, that sucks. But you're 20 years old. And what are you living in an apartment for if you have family to live with? You live in a basement in a corner and you save your money and invest your money and you build something. Existentiality has been lost in society. It's been made too easy. And people aren't students of history anymore, what people went through merely 100 years ago. The late 1800s, holy shit. If the kids nowadays had to grow up in the 1800s, they wouldn't make it. They would never they couldn't make it. Oh my God, the system would have chewed them out in the late 1800s. Oh my God, it's too easy nowadays, or maybe that's a bad thing because it's the perception that it can be easy, and now the ease of access and social media and content to see what it's like when it's easy, and that skews expectations and it leads to disappointment, dissatisfaction, and all these emotional burdens society is experiencing. But take your time, and then don't necessarily. You don't have to gamble. You don't have to do things like that. Learn how to program and write some software contracts or accumulate these types of deterministic and immutable businesses and seek out opportunity. I mean, at minimum, all of you should be studying Real Vision. Raoul's company, realvision.com, and understanding the way the financial system works because this financial system isn't going anywhere. If anything, it'll mutate, it'll change, they'll upgrade it, they'll patchwork over it, it'll become more perverted than ever. But I'll see you and the dollar in 20 years from now. So you might as well understand how it works, why it works, what they need to do to make it continue to work, and get a sense of where things are heading so you can position yourself accordingly. Probably one of the best educations you could get is literally from realvision.com. You'll get a better financial education listening to the brilliant people on that platform than you will. It's not possible to get that education from a college, an institution, and textbooks. It's too slow. I mean, literally, just listening to a couple of years of Luke Gromen will change everything. It should. And that because then you're going to hear all those terminologies and it's going to send you down the rabbit hole. So follow the rabbit hole, understand economics, and find a way to be productive. Listen, I say it all the time. My hope for my children, worst case scenario, they get a job at Starbucks and they're good to go because I did what I did for a home, and then and you so stay with your family. Never to neglect your resources. I don't understand. I appreciate that the world's complicated and children get into complexities with their parents, but it's one of the most important things, family. And it's very different geographically around the world, like India and China and different cultures, very family oriented. And they don't get into complexities with their family. It's always at the margins where shit goes down. But that's the most important resource you have is your family. So you never shit on your family. It's the most important thing. Anyway, I digress, but these are all, life lessons that I've learned and me attempting to digest the way society's changing because I think very much about my kids. Snoke, much appreciated. You as well. Good questions. Time, process time, and that's actually harder to do when you're younger. When you're older, time becomes more significant. You don't really think about time when you're younger. When you're older, time is there's less of it. So you have to be more appreciative of it. So let time do the work. What time horizons to consider with regard to projects like Fractal or Layer Zero? I mean, those are some of the biggest real economic markets that I could possibly think of. The narrative for Layer Zero is pretty much probably scale and scope um, that of Chainlink. Now, I understand Chainlink deals with the real world and the potential CCIP tokenization of real world assets. Layer Zero, not necessarily that, but Layer Zero is what is used as the premier cross market um, uh, asset exchange in crypto markets, endogenous versus exogenous. So, where the hell is these markets going? Are these markets going compared to the real world? So, apples and orange in some regards, but Layer Zero to me is just as big of a potential future market as compared to the likes of Chainlink tokenizing real world assets. Because if you start tokenizing real world assets and this space expands because of that capital, okay, so the need for infrastructure to move these assets. I think my internet went down. I don't know how well the bandwidth is going to last right now, so I'm going to wrap up the stream in a couple of seconds. But I think you got some last a little bit of content that's coming through. Um, Although it may have whale cap, it could be. We're speculating on where those positions are heading. What are your factors that go into your considering? There's a high probability of higher lows, higher highs, interest rates over the next decade. Loaded question for now. We'll start another stream. Let's bring that up on Monday, Adam. Good topic. Cap liquidity from BTC ETF inflows is not available to enter crypto markets. Other forums. What is your opinion on the relationship and what does it mean for DeFi? Two different markets to inspect. Great potential for Bitcoin to deviate from expectations. Uh, that is a significant consideration. Start of an entire conversation. Bring that up on Monday. We show the new guys where to go to check yields on Curve and talk about how you choose a liquidity pool. Um, I prefer not to get specific about demonstrating how to engage with these markets. Conceptually, I'm comfortable talking about these things, but obviously, Curve That Finance works great for. I'm not going to get really into tutorials. Stuff for like DeFi Dad and other content providers. But obviously, on Discord, I'm sure folks are willing to help. But generally, vote market, stakedao.org, and quest.paladin.vote are where you go to get those types of uh, that kind of information. Dark in August, much a pleasure. Let's wrap it up for today, as I've lost a decent bandwidth because Xfinity, when they go down, and it's horrible. So I appreciate all of you for stopping by on a Friday, March 15th at 1:08 p.m. Hey, I enjoy this. Ask some of these questions again. Ask them until you're blue in the face. And I've repeated myself 10 times over. And we'll continue this on a Monday. And never hesitate. Ask anything on your mind. Tell everyone to subscribe. Link in the description on YouTube to the most rational community in the entire crypto space. Stop by again Monday. We'll talk like this again. Have a good weekend. Peace.